What's going on? Welcome back to Trending Stocks. Today we're going to talk to you about SoFi. I want to go over some of the current data points, break it down on what's really influencing it today, and then over and above that, just talk on realistically when I would be buying SoFi next. Before I get into any of that, make sure to hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So right now, SoFi is down 0.65%. Very little volume, so 50 million shares have been traded. 66 is the average. Market does close in less than 1 minute. So based on the volume, it is fair to assume that big money is not getting into SoFi. And plus, you can kind of look at this as well. That does exactly say that. So these are all the transactions that have occurred on the secondary market above $100,000. So big money has been avoiding SoFi, clearly because probably CPI is coming out tomorrow, last minute jitters and all that. And I did even say in my pre-market video that SoFi alongside some other stocks were probably going to pull back during power hour, and that is exactly what has happened over the last little bit. So when it comes to SoFi though, there has been no SEC filings, no press releases for today. Shorts though have been increasing, so they increased 109,000 shares. 18.52% of the free float is being shorted, and that works out to be 109.04 million shares being shorted. Cost to borrow average is 1.13%. And as well, utilization is a 74.07, so rather high. So shorts have been really still getting into SoFi despite everything, despite a lot of the positive data, aside from obviously CPI coming out tomorrow. So shorts are really pushing SoFi to get to kind of the SPAC levels. Once again, that was roughly about 22% short interest. So it is going up there. But when it comes down to some of the data points and some updates, the only new updates were this. So there was a new analyst rating. So Kevin Barker with Piper Sandler did give a $8 rating today, and it was more of a cut from $8.50 down to $8. So once again, that's kind of a good thing, bad thing. I'll leave it up to you guys to make that determination. But aside from all of that though, options. So when it comes down to options, $6.95 million in calls being purchased versus 2.42 million in puts. Sentiment wise, 48% of all the options being done today were bearish. And so once again, you have to factor in by shorts increasing, most likely a lot of these call options that were purchased were shorts just hedging. So in reality, that's why it does make this somewhat difficult to analyze this information, especially on any stock that is very much heavily shorted, because shorts kind of skew the numbers somewhat. Of the call options that are being purchased today or were, there's a consensus for it to be above $8 versus the puts. It is anticipated for it to be sub $7. So the risk versus reward is definitely pointing towards more downside than upside. And that is why I did sell some of my position on Friday. So at the peak, I think it was 778 or something like that, or 770s. And then today I did sell the remaining part of my position at $7.89. So right above a very strong resistance level. So that's one thing that's really been influencing SoFi. Of course, there's a lot of different things and factors that moves SoFi up, down, sideways, but I'm sure you can tell on my channel, I'm very much technical driven, both on micro and macro levels. So based on everything, SoFi's technicals are kind of pulling down. And even though over the last several days, it did have a nice spike and a potential rally, but it did once again fail to get above a very strong resistance level. So I'm going to talk all about that. And so right now with it closing at $7.68, it is trading between this S1 and the pivot. So as it stands, $7.17 is a very strong support, vice versa, $7.97 is a very strong resistance. So coincidentally, it did bounce off of that. So once again, that's usually where it will consolidate and trend down, but dependent on CPI data, that could really push it to the lower percentile. And I have seen a lot more people be kind of bearish on the upcoming data, which is again coming out tomorrow. So once again, even the technicals beside all of this is somewhat negative. And so this is where I did move my position from SoFi to PayPal. So I've been buying PayPal quite significantly over the last couple days. And even prior to that, I did have a position in PayPal, just never really got around to doing videos, but that's why I'm going to start doing PayPal videos as well on this channel, just on a side note. But based on the technicals, so right now it is lower percentile of the Bollinger Band. It was gaining some momentum to transition into the higher, well actually more specifically above that 100-day moving average, but it did fail. So in reality, SoFi does have phenomenal earnings. Like fundamentally, it is very good. Just based on the technicals, it just hasn't gotten the appreciation from institutions. And in order for you to have substantial gains, you need institutions on your side. A lot of people like to throw around Cathie Woods. She just has, in my opinion, too much money for her own good. So she's just throwing money at a lot of these stocks that doesn't have the backing of institutions. And so far, well, I guess in 2023, didn't really work out in her favor. So she was more so the laughing stock of the market. Somehow with this nice rally that did kick off in December, this is where she's starting to have a little bit more relevance. So by her buying into SoFi, a lot of people seem to be really thinking that's a good thing, whereas me, not so much. I just think that's kind of neutral. Like she's no different than retail essentially, just with 10 times or 20 times more money essentially. But looking at stochastic, you do see starting of a bullish deviation, so white line above the red. And so in theory, if there is a good piece of news that does come out specific to SoFi, you could see some value investors getting in. Well, again, a lot of this is going to change dynamically based on CPI. So if CPI is negative, then anticipate this to test that $7 range. And if that 717 does break, then the Elliott wave technicals I previously did state, where it'd be low sixes, would come to realization. Number of retail investors have been getting out. So at the same time, big money and retail have not been buying SoFi. So let me know your thoughts on SoFi. Give yourself a shout out. Have you been buying? Have you been selling? Like what have you been doing with SoFi? And even though I did sell, I'm still having SoFi on my radar. I do really like the fundamental business, and plus the growth is absolutely phenomenal. It just doesn't have the backing from institutions that a lot of other companies such as even PayPal does have. So all in all, given all the technicals and everything that I mentioned, realistically I would be a buyer at just above the kind of the Elliott wave technicals. So around the 620 to 650 range is where I would buy. Of course, once it does get down to those levels, this is where it kind of gets in more of a death spiral, so it gets dangerous mode. But realistically, I would be more comfortable buying it at around 620, 630, all the way up to 650. So that's my own prediction. Let me know your thoughts. Don't forget to hit that thumbs up and subscribe. And with all that, appreciate all of you watching.